Welcome back to another video. Welcome back, Royalty FX Academy, where we learn how to trade the right way, patience, discipline. Today, we're going over some setups. To be more specific, we're going to cover some selling setups. Okay, let's get into it. All right. So when it comes to trading the market, you can either buy the market or sell the market. Since we're covering selling setup today, I have some rules written down so you could follow that you need to follow if you want to be successful when it comes to trading itself. So rule number one, trading. Rule number one, if you are going to trade the Forex market, setups, okay, your setups have to be based off the higher time frame. That's rule number one. And those higher time frame will start with the monthly, the weekly, and then the daily. Okay, so that will be your technical analysis where you mark your chart, your zones, waiting for that turnaround point. Now, rule number two. Once rule number one is complete, all right, rule number two is where you are going to enter your trade, right? Where you're going to be entering at. So the time frame, to be exact, entry time. So your entry time frame, to be more specific, okay? Your entry time frame is going to be, okay, the H4, all right? The 4-hour time frame, okay? Where do you look to enter the market when it comes to the time frame? The lowest time frame you are going to use is going to be the 4-hour time frame, okay? And rule number three is our confirmation. The only confirmation that we use that indicate that either buyers or sellers, in this case, have taken over the market, it's going to start going down. That is our bearish, okay? Our bearish engulfing. PA. So let's just abbreviate that real quick, okay? Our bearish engulfing PA. So that's our bearish engulfing price action. So once again, rules when it comes to trading the market, especially when it comes to your sell setups, right? Rule number one, all technical analysis has to be based off the higher time frame, either the monthly, weekly, to the daily. Rule number two, what time frame am I using to enter the market? We want to use the 4-hour time frame as the lowest time frame to enter the market, okay? And rule number three, that is the confirmation that we need, right? The candle that tells us, hey, buyers, hey, sellers are now in control of the market. It's time to execute, right? That is the engulfing, okay? The engulfing bar. So the bearish engulfing, especially if we're covering selling setups. Now, like I said before, right? If you want to learn more in depth about these type of setups, the time frames, how to mark them down, just remember the books are now available on Amazon. Just type in Royalty FX Academy. It should pop up. Now, with that being said, setup number one. So when it comes to sales, we have two types of sales, okay? Two types. So type one is the DT. So I'm talking about a double top, okay? Where the market gives you a double, I don't have enough room. Where the market gives you a double top, DT, to sell, and then setup two, where the market gives you a break and retest after the double top to fall. So we're going to cover a few different variations of double tops that I do have in my book. All right. And let's just go ahead and cover the first one. Okay. Boom. So double tops. When it comes to selling the market, your setups are either going to be a double top or a break and retest. So setup one, we had market that went up like so, was buying up, giving you higher highs, where each high is higher than the previous high. And of course, after each higher high, we get a high low, okay, where each low is higher than the previous one. And then market went to a specific level. It turned around. Here was a bearish, okay, was it bearish? PA. So the market gave us a bearish engulfing price action to fall. So we mark that area, generate a zone like so. That's our zone. So when the market falls and then go back up to the same zone, we look to take the sell. Now, the first variation of a double top is when you have two equal highs, where the market goes to the exact zone, right? It doesn't go a little bit above. It doesn't stay a little bit below. It is exactly at the zone, okay? Meaning it went up, boom, right? Came down, and then went right back up, like so, to fall back down. So see right here would have been your zone. Okay, see it hit the zone exactly, and then to turn back around. Now, of course, like before, when we got a double top, we always look for a bearish engulfing. And here is our bearish engulfing. So let's just generate the last bullish candle. Let's go to yellow, right? Close exactly at zone, boom, right? And then market come back, okay? Like so, boom, to give us that bearish engulfing. So let's minimize that. Here is your entry. Market went past the first red line. It indicate market has now has taken over. So it engulfed the last bullish candle, which is the yellow candle, okay? Here would be your entry point, okay? Whoa. That would be your entry point. And of course, with your stop loss, you want to look to the left to place your stop loss. Now, one more thing I want to go over when it comes to the setup itself. When you're looking to sell the market, when market come to the zone, even though it's a double top, we're not so fixated on the double top itself. We know it's at a specific level. We know it's at a zone where it fell before. The reason why I'm saying it like that is because when market goes to a zone, you want to look to the left to see what it did before, okay? And based on what it did before, you're going to look for it to do exactly the same thing again. Once market does that, then you enter for your sell. So your first concept of a double top is when you have two equal highs, all right? Let's go ahead and move on to the next one, okay? So setup number two, just like before, the market itself was giving you higher highs, right? Where each high is higher than the previous high. Okay, boom. All right, each high is higher than the previous high. And here we have in high lows, okay, where each low is higher than the previous one, right? Bullish trend. Market stops here for whatever reason it was, and then give us a bearish engulfing PA price action, and then fall, just like so. All right. So we generate a zone. We mark a zone. Boom. For when and if market come back like so, market goes back to that zone. Okay. But this time it didn't hit the zone exactly. Okay. That's setup number two. So setup number two is when you get a double top. Okay. When you get a double top, market goes up, boom, come back down, and then goes back up to come back down, but did not exactly hit the zone. All right. It's a little bit short, which is perfectly fine because we do get those type of setups. That's why we're going over this. Okay. Now, just like before, even though it didn't hit the zone exactly, a lot of time the candle you might get at this level, right? Let's go ahead and generate a bullish candle. So we're going to do something like this, right? Now I'm going to show you how it would look like. Let's just say the last bullish candle went up like so, okay? And then come down, okay, to close. Now, what I mean by that is, I'm going to show you real quick. It went up like so. I'm going to go ahead and draw another one to show you how it would look like when it comes back down, right? It went up, but when it went up, it came back down. So it went up and then to come back down to close, right? Now, giving you a smaller body. Now, it's not that it didn't hit it exactly. It's just that it closed with a wick, meaning it left a wick. So it went up bullish and then it came back down bearish. So let's go ahead and do it again, slower, so it could be more detailed. So with this two variation, okay, let's do the easiest one first. The easiest one, this is the last bullish candle. Boom. Okay. And when you get in the chart, you're waiting for a bearish engulfing. When the market gives you a bearish engulfing like so, just like before, you would enter here. Okay. You would enter here. That's your entry point to come down. And then you will look at the previous high for your stop loss, right? That's just one variation. Now let's go back to the other one. Okay. Now this one I'm talking about here is pretty much this, where I'm going to draw this one with I don't know if you guys ever used the bar chart before, but I'm going to show you how pretty much the characteristic of a bullish candle. That way you have a much better understanding. Okay. Now, if you pay attention down here real quick, right? When a bullish candle opens, right? Let's go with this one. When a bullish candle open, it does this. That will be the area where the last candle closed. It opens, goes down like so, and then goes up, right? It opens, go down, and then it goes up, right? And then it'll come right back down to close. All right. Now, may look a bit weird, but when you fill in the blank, right? So this is the body of it. Okay. This will be the body of the candle. This will be the wicks, right? So a lot of time you get a candle like this up there where the body is not at the zone, but the wick hit it. Sometimes, of course, like the first one we did, it just doesn't hit that zone exactly the way we would like it to, but it went towards the same zone area. It just was not a perfect double top accordingly, right? Now, you know what? I took a sell on GJ. You know what? Let's do this real quick. Let me show you this real quick. I took a sell on GJ right here. See this sell right here? Ooh, come on. All right, I took this sell. A little bit of lagging going on here. Okay, cool. All right, you see this right here? I'm gonna stretch this out for you. That way you can see I took this sell. Now I'm going to generate a zone so you can understand what I mean, right? So now I know this is the 4 hour. This is a double top in the 4 hour. Now, this setup that I took, okay, this setup that I took was a monthly setup, okay? It's a monthly double top, and I took the 4 hour bearish engulfing. May not be able to see it, but if you could see a little in the corner, monitor the red line, that's my entry point, right? Now, I'm drawing a zone to show you, right? You see how the market itself did not hit the zone, right? It got close to it, right? It got close to it, but it did not hit the zone. But it still went up to give you a double top. It just happened to be uneven. Now, we do get set up like this on the higher time frame. So I just thought I'll use this to show you an example, of the setup itself. Okay. Variation number 2. Some double tops will not hit the zone exactly. It will close like so, but it will be within the zone area. And some of them will give you you see this pin bar right here, this candle. Notice how it went all the way up? That right there is a break and retest. Since we're going to go over that anyway, so we're going to come back to this. Okay. This is a break and retest. Okay. To go back down, right? Notice that it went towards it, didn't exactly hit the zone because it's not always going to hit the zone, but it went towards the zone. And then here, right here, is your bearish engulfing. See that? Ooh, don't want to touch that. Let's lock this in real quick. Okay. Here is your bearish engulfing to go back down. Easy. Pull that trigger also. Not able to move the camera at the moment, but that's a sell that I took. All right. I'm looking at this in the bigger picture. That's why this is all the way down here. Now let's get back to the variation number 2 when it comes to the double top. Okay. So yeah, like I was saying, so just like before, rule number 1, the setup has to be based off the higher time frame, either the monthly time frame, the weekly time frame, and then the daily. That's the lowest time frame you want to use. And the 4-hour is the time frame we will be using, that you have to use, but I highly recommend that you use when it comes to pulling the trigger. All right. So let's go ahead and generate a price action like we did before. Let's just do this real quick. Boom. Last bullish candle. And then like so, bearish candle to engulf. And then entry point. Let's mark a red. See that? It went past it. So you would enter here. You look to the left, last high to put your stop loss to fall. So that is variation number 2 when it comes to double top. Okay. So a little side notes again, if you want to learn this more in depth, I do have that in my book, The Master and Bearish Forex. It's the ultimate selling setup. Okay. Where I do have all 5 variations of double tops. Okay. But today we're just going to cover a few of them. Now, same concept like before, same rules. You always got to follow the same rules, right? So let's run them down, right? Rule number 1 has to be a monthly, weekly, or daily time frame. Rule number 2, right? We're using the H4, which is the 4-hour time frame for entry, okay? And rule number 3, we're using engulfing, okay? The engulfing PA, price action, okay? To be more specific, the bearish engulfing. So you got to follow all these rules when it comes to the setup, okay? Now, let's go ahead and continue with this. Let me get rid of this real quick. Boom. All right. So just like before, we have market going up in a bullish trend, giving us higher highs, okay, where each high is higher than the previous high, okay. Rinse and repeat, okay. Rinse and repeat. Always mark down your points, your structure points. Rinse and repeat till it becomes secondary. All right. Okay, so bullish trend, market give you higher highs and higher lows. After each higher high comes a higher low, and then market did sell. This was our turnaround point. When they start selling, we start getting all low highs, okay? And of course, lower lows. So remember, in a downtrend, you get lower lows and lower highs, okay? Lower low, see this is a bit higher. We don't know what kind of candle we did, but it is a bit higher. So that would be a high low, right? A higher low, like so. This right here would also be considered as a lower high. And then here will be your first higher high. Now, notice this right here. Notice how market broke the zone. Nothing wrong with that. That's variation number 3. A lot of time, the last bullish candle will give you something like this. Boom. Right? Last bullish candle will be like that, and it'll close above the zone. There's nothing wrong with that. It's just at the zone. Did it break? Yes, because it closed above. Yes, but it's still a double top setup possibility. It's still a double top setup possibility, meaning that all we need is a price action because it's within the zone. All right. There's no rules that say it has to be perfect. Now, again, bearish engulfing. Okay. Notice the red candle engulfed the last bullish candle, just like before. Okay. Now, if you don't have a previous high, meaning a wick here or a previous structure to the left for your stop loss, what you look at, excuse me, what you look at is the last wick the last bullish candle give you, and also the bearish candle. Remember, so just like the bullish candle, let's do a characteristic for a bearish candle, right? Before it sells, it's going to do something like this, right? It opens, it will go up, and then it will go down, right? Due to the fact that, it's a big bearish engulfing, right? Let's just do something like that. So when you fill in the blank, right, when you give it a body, it will look something like this, right? That's the way it opens. Here is where it closes. Okay, so this right here will be wicks. Okay, now we can make it look better. Okay, do a half. Let's make a half. So sometimes you get this. It opens, goes up, okay, goes down, and then boom. So here is where you have a bigger body. Okay, yeah, sorry. Here's where you have a bigger body, okay? Like so. So you see that? That will be the wicks of it, okay? So what I'm saying is when it opens, right? Opens, went up to come back down to start that. So when you do enter, you will look at the wick high, whichever one of them is high, to place your stop loss, okay? But you always look to the left, all right? You always look to the left. You're looking at what market did last time before it sold so you could enter. Very simple. After a while, it just you're just repeating the same thing over and over until it becomes secondary to you. But you got to take it serious though. All right. Also, always look to the left to see what the market did last time so you can read and react. So before we even go to the next one, right? Sometimes market will come to the zone. If the market comes to the zone and range or consolidate like so, and then fall, next time it goes there, even if it breaks above, anticipate the market to give you one of those. Right? It'll give you something like this where it won't be a bearish engulfing, right? But it will be exactly next to it where it will range and then it'll give you, and then a bullish candle, right? Probably does not engulf. Okay, probably. Sometimes it does. I got cooked this week too with that. I took a bearish engulfing for what it was. Was it? No, my bad. I took a bullish engulfing for what it was. And then market did not go my way. And then it did give me the bearish engulfing. I took that for what it was. So I just read and react. And then boom, here would be your entry. Okay, right? Here. It engulf. Boom. All right. So just like that. So if you follow this method and you follow this concept, it is the easiest way to trade. I guarantee you will have a 75% winning rate. I guarantee you that. If you don't believe me, go ahead and backtest it. Pick your pair. Gold, NASDAQ, US 30, AU, EU, GJ, GU. Just identify the highest time frames, setups. Identify double tops, double bottoms. And I guarantee you, before the market bought up or before the market sold, it had to give you either one, a bearish engulfing for the sell, or two, a bullish engulfing for the buy. And and of course, when you take your trade, you always want to use the last high for stop loss or the last low for your stop loss. Okay, so here is your entry, like we was talking about, and then to come down. Okay, so run it back one more time. Selling setups, double tops. Okay, selling setups or double tops. Okay, where the market give you two levels, and then to fall, it comes in different variations. Now, when it comes to selling setup, rule number one, always use your higher time frames to do your technical analysis, marking your zone. That will be your monthly, your weekly, and your daily. Rule number two, the time frame that you are using to enter the market for your trade. I highly recommend that you use the 4-hour time frame. That's a lot of time you have to relax and wait. And one of the things you will learn also in my book, I'm gonna tell you that right now, if you're using the 4 hour to take your trade will be available to you either at 1, 5, or 9, right? Either 1 p.m. or 1 a.m., 5 p.m. or 5 a.m., or 9 p.m. or 9 a.m., right? Believe it or not, you guys normally trade around that time. For people that say they only trade in New York session, I'm in Florida. That's what, by like 9 a.m. You want to trade to London by like 5 a.m., right? Market opening is 5 p.m. Asian session. So I believe around Sydney, Australia, 1 p.m. So you see that it's within 4 hours. So and rule number 3, which is the last one, you want to use the engulfing price action. Please, I guarantee you that bullish engulfing or bearish engulfing, it just comes in different variations. I have that in the ultimate price action. Amazon, type in Royalty FX Academy. You will have that, the ultimate price action. So yeah. And first setup is when you get a double top where you have 2 equal highs. All right. Textbook. You look to the left. Okay. Reason you're looking to the left, you want to see what the market did last time before it sold. That way, once it gives you exactly the same thing that it did last time, then you will go ahead and enter. Okay. The only thing that might vary is just the price action that you get. Still going to be an engulfing, bearish engulfing, just different variations. Okay. And setup number 2, when it comes to the double top, is when the market goes towards the zone, but does not exactly hit the zone. It falls short just by a little bit. Okay. It does not mean your setup is not available. It's within the zone. It's a little bit tricky, but that is one of the type of setups that the market give you, just like I just went over, and that's what I'm holding right now. I think I post that on my Facebook, Instagram, and TikTok, also on YouTube. The setup itself, I'm still hanging on to that. But yeah, so this is the setup where the market itself does not give you the exact same level of highs. Okay. Now, here's the next one. So the next one is when the market gives you a double top, but the second top happened to go a bit higher than the previous one. There's absolutely nothing wrong with that. Okay. Sometimes the last bullish candle closed a little bit above it. Sometimes it can be a wick. What do I mean by that? The market will naturally go up, but then come back down, right? To close like something like this. Okay. Sometimes the wick is a lot longer. Okay. But that's just how it is. That is the next one. Okay. So let's continue. Now, what we're going to cover next is what happened after a double top. When the market gives you a double top, what is the next setup that you will be waiting for? And that is the break and retest. So just like before with rule number 1, you want to use the highest time frame, monthly, weekly, daily, and you want to use the 4 hour for your time frame as far as entry, and you using the engulfing price action to enter your trade. Now, Like before, we have a bullish trend. Remember, bullish trend consists of higher highs and higher lows, where each high is higher than the previous one, where each low is higher than the previous one. Now, after the market got done, give you a double top, right? What you're looking for is for market to break the previous structure, right? Now, sometimes it's not, hold on, let me use this, make it a bit easier. Sometimes it's not going to be as clean as this. It's not going to be so textbook, but that's why I'm going over different variations, okay? So what we're going to go over is what happened after a double top, what to expect. Once market break a previous high low, like so, you will naturally wait for the market to come back and hit or retest that previous high low. But once market stops to go up, the new structure point will be considered as a lower low, right? Because it's lower than the previous high low. Now, it does get a little bit tricky, right? Where it could come a little bit higher, or it could go back up to give you another double top to sell back down, or you could stop here and then to fall back down. But the same concept stay the same. Now, if you just happen to be in a chart, you happen to miss the original double top, the rules stay the same. You're looking for a break and retest on a monthly, the weekly, and the daily. Then you use the 4-hour time frame to execute. Please stay consistent with that, okay? So we want a break of a previous high low. So that is the trend reversal, okay? Excuse me, right? That's a trend reversal. So we know we was in a bullish trend, right? To be in a bearish trend, market has to break a previous, right, high low, okay? Very plain and simple. Now, let's continue. We're going to go over the different variations of how it might look like. So this is the first one where market goes to the zones where it hit a previous high low that matched a previous higher high and pull back exactly at the previous high low. And then like before, we are looking to get a bearish engulfing for price action. And when we take our sell, I repeat, when we take our sell, you want to use the previous high to place your stop loss, please. Okay. Straight to the point. Keep it very simple. All right. Just don't over leverage. If you feel a little bit iffy about it, chances are you over leveraging. I understand the account is small, but just drop the lot size over time. You will get the hang of it. You will learn to understand. Also, in the next video that I'm gonna go over, I'm gonna go over that also as far as what's the number one thing that you need to have before you start your trading journey. You must have one of those. You gotta have one of those. Okay. Doesn't mean you can't be successful without it, but it's going to be very, very difficult. All right, cool. So setup number setup number 2. Again, break and retest. So we know market was in a bullish trend, all right? And we are looking for a trend reversal. For us to get that trend reversal, just like before, a previous low, okay? So in a bullish market, that's going up, giving you higher highs and higher low. So a bullish market is a buying market that's going up. It's an uptrend market. For that bullish market to become a bearish market or a selling market or a falling market, same thing, different terminology. Okay. A previous, a previous high low has to be broken. All right. A previous higher low has to be broken because once the previous high low is broken, market will go on to give you a lower low, right? And then when it goes back to retest that previous high low, once you get your price action for the market to fall, you will get a low high, all right? Where each high is getting lower than the next one, okay? So, all right, so like I was saying before, got a bit sidetracked. Like I was saying before, market is in a bullish trend, giving you higher highs and higher low, and we're looking for a break and retest, right? A lot of time, market will go to the previous high low, consolidate or range, however way it might range. It might wedge up like so, right? Then, to fall. Once it broke this point, now we have a first break of trend, okay? When market goes back to give you the next structure high point is when we wait for a price action to confirm the full trend reversal. That's just the first part, okay? So the first part of a trend reversal, market will have to break previous low point, right? It has to break it. That's just the first part. It doesn't mean we are now in a bearish market just because it broke below it. Because a lot of time, it could just do this. Okay? It can. So our job is to simply read and react. The same reason why I don't say resistance or support, supply or demand. I just say top zone or bottom zone because it's just a zone, right? It's just a structure. Once market break the structure, right? That's just the break. I'm just simply, yes, I'm anticipating a specific reaction, but that's all I could do. Once market does this, then go back up. Then I'll anticipate the next one. Now, here's the thing about this, right? When market goes back up, it's always going to stop at a previous structure point. Okay? Just like before, it's never going to be random. That I could guarantee you. It's always going to be at a previous structure point. That's why it's very important for you to keep on marking your structure points, your higher highs and the higher lows. Even if you don't put the letters, just put a little line. Okay? Just a little line. So let's do something like this, right? We have a bullish structure, right? Where the market is giving you higher highs. All I'm saying is you don't have to put H's and L's. You can just something like this. Just a little tap. Put a little zone, right? Because when the market is coming back down, you know where your zone is just to pick it up from. That way you don't have to go all the way back to study the uptrend to identify all the structures because you already identified the structures when the market was going up. Okay. It's just doing a little bit of extra, just keeping track of what the market is doing. Okay. So, excuse me. I'm sorry. Now, last time the market had bought up, it stopped at the previous low high, but this time around, you could see it went to this structure point. It went to a previous higher high point. Now, it get a little bit tricky. I don't really like these type of zones so much. That's what I mean by that. When the market does this, boom, right? And then it does this, right? Now, it breaks, right? And then you're thinking that it's going to stop here. I'm going to do a half. I'm going to make it a bit shorter because it'll be a lot easier, right? When you have two structure points that's really, really close to each other, a lot of time, the market, the market itself is going to retest the next highest one a lot of time. So like this, right? It probably will give you a price action here and don't go your way. And then to go to this next zone here to give you the same price action again, and then to go your way. Okay. So that's the reason why I'm saying that. So I did say guarantee about 75%, actually about 85% winning rate, not 100%, because our job is to just simply to read and react. Okay. We are just reacting to what the market give us. It is not our job to tell it what to do. Once you start assuming, you started barbecuing yourself. All right. You started creating doubt. Okay. When in doubt, no trades or demo it. make sure your demo account has the same amount of money that you would have start trading with. Don't go starting with a 50K demo when you know your live account is going to have at least, let's just say 500. Okay. So be realistic with it. Okay. Please, please. So yeah. So that's the second variation of a break and retest. The first one is where market actually respect the previous high or low to fall back down. With the second one, it stops at the next structure point. Okay. Just like I mentioned before, a lot of time it can go right back up to fall. I did not go over that. It's in the book. All right. Now, there goes the next one. This, another bullish market. Okay. Now, this time, the previous high low is all the way down here. Now, the market goes up to give you a double top. Like I mentioned before, you always look to the left, right? And it'll start giving you small structures like so. You see that? It breaks and it stopped right there. Now, if you are somebody that use the Fibonacci, now when it comes to me personally, I only use 50 and 61. As for 50 is the lowest I'll go when it comes to my fib retracement. Okay. You will place your fib from the high point. From the high point to the new low point. So you will naturally wait for the market to give you a price action, right? A PA to go up. Once market give you that price action, you will place the fib from high point, last high, to the new low, and then you will target the 50% of it, right? Now, you notice that I stopped it here, not exactly at the zone. That's because a lot of time market will stop in the middle. Now, because that's the higher time frame, when, let's just say this was the weekly time frame, right? It's the weekly time frame, but in the daily time frame, you probably have a small infrastructure like so. That's probably why it stops there. Okay. You know what? Here's a perfect example of that. Just like we did before, right? Let's look at current trade that I'm in and based on what the market is doing. Okay. Let's do this. All right. I'm gonna crunch this a little bit. All right, you guys see this? Notice the zones. Where are you, buddy? Did I move you? Oh, there you go. Looking for my little annotation stick, but I don't see it. But come on. Oh, there we go. Everything just blend in so well. There you go. Now look. Now I know this is the 4-hour time frame. What I'm trying to show you is this was the last low, right? And last high, last low, market range or consolidate, broke. See right here, it retests this point. Here is a bullish engulfing. I took the bullish engulfing following the monthly and the weekly trend to go up. Right here, guess what? It didn't go up. Instead, it turned around and gave me a bearish engulfing. You know what I did? I turn around and take it for what it is, and it did just that. Okay. Here was my next target TP on the 4-hour, right? And then guess what it did? It gave me a bullish engulfing, right? At my zone, TP got hit. I took the bullish engulfing, right? And then guess what? It turned around and gave me a bearish engulfing after that. So here is a loss. And let me be more clean with this, okay? Oh, no. Let's do that one more time. So high, okay? Higher high, higher low, right? So here, higher high, okay? Between here all the way to here, all that is a high low, okay? So when the market itself broke to retest, I took the bullish engulfing because it went above and it did this. See that? When it went above, breaks this right here, came back. I took my bullish engulfing for what it was. Instead, it turns around and gives me a bearish engulfing. So I took a loss on that one, right? But here's the best thing about this. It didn't hit my stop loss because by the time it gave me that bearish engulfing, I was able to close that trade myself, right? I closed that trade to take the sell. It kind of consolidate here. See that? The next 4-hour candle was a bullish candle, but it did not engulf. And then after that, it gave us a bearish engulfing after that to continue, but I was already in the trade. Now, the next target TP for me was the next structure point. It did got hit, right? So I made my money back plus more. And then I took the bullish engulfing because I saw it as a deeper break and retest. What do I mean by that? Look, here, let me get rid of this right here, okay? So we can be on the same page. Yes, we all take losses, even I. So look, I saw it as a deeper retracement. I'm like, okay, cool. All right, no big deal. Target TP. Let's go ahead and take care of that. Boom, TP got hit, right? And it gave me that bullish engulfing. Just like before, I took it for what it is. But guess what? Instead, it turns around and gives me a bearish engulfing. I'm like, okay, cool. So that's another loss. So I took 2 L's, right? 2 learning lessons, right? 1 win so far. And then I took the bearish engulfing to come back down. Now, the market may not had sell so much, but it sold a lot for me to make all that money back, right? Let me show you, right? From here, boom, 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 stops here, right? Went up and then down. So boom, right here. And then next bullish engulfing was right here to go. If you missed it, this would have been your next trade. You see that? Now, I'm showing you this because just like the sell setup, a lot of time it'll go a little bit higher. Okay. It's not always going to stop halfway. And the same thing with this, right? Let me show you this, how it looks like on a daily. That way you can understand my overall perspective and how I'm seeing this real quick. So I'm just going to show you the daily just so we understand the chart with my overall trend. It's going to be a bearish pin bar. You see that? You see, this is exactly where the market is at right now. See that? Look at my entry, right? So that zone is a monthly zone, okay? Now, this is what I mean by that. Again, I'm going to pull it up. So since we are talking about a sell, this is perfect, right? I'm going to sell up here. Now, market went up. See that? Broke, okay? I took the sell off the top. See how it came here, right? To the zone. What I'm saying is, for this buy setup here, right? Based on like how it's looking right now, right? It doesn't have to buy off this point. It could fall right back down here to give you a bullish engulfing and then to go up, right? Now, since we are going over sales, right? Since we are going over sales, we're going to do this one more time. Boom, 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 break, right? Since we're going over sales, I'm looking for it to break like so and then to come back. Now, what I'm saying is it may not just stop here. It can go all the way up to this zone like so, and then the fall. See that? That's what I'm hoping that's what I'm hoping the market does for me because I'm holding it for as much as for as long as I can. All right. Swap fees kicking my butt though. I'm not gonna lie to you. Whew, costs a little bit. Now, yeah. So that would be the sell that we're looking for. So again, in the case of this, I could create a pillar, meaning like to give you some form of a double top aspect to show you, okay, it did hit. Okay. And this is what it did here. Okay. I'm just saying that's probably kind of like what it did. But yeah, this is a monthly setup to come back down. So I just wanted to show you a trade that I'm actually currently in. And that's how it looks like on the daily. Let me show you how it looks like on the weekly. My entry is all the way at the top. All right. My entry is all the way at the top. Okay. All the way up here. Right. I don't have a weekly bearish engulfing yet for the continuation, but we do have a weekly bearish pin bar because the body of the candle is bearish. Okay. I'm just looking for it to clear here. to do this. But like I said before, this right here is a monthly zone. Okay. All right, let's go back to the teaching. That way this video doesn't go too long. X this out. All right, back to the chart. Okay, so different variations. So like I was saying before, right? When in case of this, all you have to do when it comes to the fib from high point to the next low point, and you're looking for either a 50 to 61% retracement or at least to your zone. Again, sometimes it could stop in the middle because it's small little infrastructure on a lesser time frame. Let's just say this was the daily. The infrastructure can be in the 4 hour, or it could be a previous bullish candle wick on the daily. Okay, that's what Mark is doing right now. So if you ever do go look at this, it's the GBP JPY. All right, so all right, so let's go over the rules real quick before we end this. So selling setups, okay? So we got selling setups. Always rule number one, higher time frame, okay? The higher time frame would be your monthly, your weekly, and then your daily. These time frames is what you're using for your technical analysis, all right? Now, rule number two, when you drop down, the lowest time frame you're going to use is going to be your H4, okay? That is your 4 hour time frame, all right? And for number three, okay, rule number three, which is the very last one, it's going to be your price action, okay? That's your PA, your final confirmation to enter that trade. Now, let me throw some little stuff in there that I did not, because I really wanted to focus on just the solid structure turnaround point plus the price actions and the different variations. Now these are some of the things that you will always look for and that you're pretty much going to get when it comes to indicators. Now, when I'm talking about indicators, I'm talking about the RSI, okay? When you get double top setups, your RSI is either going to be divergent, okay, or overbought, okay? Every double top setup, it's either going to be one, divergent, or overbought. So in the grand scheme of things, your setup or your trading log should go something like this, right? Time frame setup, so either month, week, day, right? That's time. So whatever the time frame for the setup may be, let's just say the weekly, okay? And then you have entry. So it's going to be entry time, okay? Entry time. So when I say time, let's just go with it. Entry time frame, H4, okay? Now, with this, remember the setup, right? Time frame. The setup comes with this. So the setup will be your double top, okay? So time frame, the setup, which is a double top or the break and retest, okay? Entry time frame, 4 hour. Now, confluences. Now, this is what I said when I said the whole indicator aspect, because I don't use indicators, but the RSI is considered as an indicator. So when I say I don't use indicator, I'm talking about other bots, little other stuff. But here we go. As far as finishing the confluences, you're going to have your RSI. Either it's going to be divergent, okay, or overbought, okay? And then your last confluence is your PA. That's pretty much it, really. So maybe I didn't go over it too fast. Hopefully not. But if I were to slow it down, I'm just literally repeating the same thing over and over, okay? your setup, time frame, trading log, right? So time frame, weekly, okay? Setup, double top, or break retest. Entry, time, okay? H4, PA, price action, bearish. Yeah, why not? Bearish, let's minimize it. It's gonna be bearish engulfing. I wanted to abbreviate it, but engulfing, okay? It's gonna be your bearish engulfing. I'm just putting engulfing, bearish engulfing. And as far as confluences, right, that will be your RSI. That will be indicator as far as anything else goes. So I guess that will be the only indicator that I use. So not saying I don't use the indicator will be me lying, but yeah. So I do use the RSI though. So RSI, and again, it has to be either okay, overbought, okay, or divergent. Cool. Literally, that's pretty much your trading log. Right now, of course, with entry comes stop loss, okay, and then comes the lot size. I didn't mention these because that's what comes first as far as the higher the time frame you want to enter, the price action you want to use, and what confluences you're going to have with it. Once you have these things, then you could think about your lot size and then your stop loss. That way you know how much you're going to risk based on where the stop loss is. That way you could drop the lot size accordingly. That way you don't over leverage. That's the word I'm looking for. Over leverage. All right. So that's pretty much it for this video. Okay. So just like before, all right. I would really appreciate if you guys would like, comment, and subscribe. Feel free to ask me any questions. I will reply, or I'll have you DM me. That way I can understand the question with more detail, so I can give you a much better answer. But 7-book series available on Amazon now. Just type in Royal TFX Academy, from psychology, price action, buying setups, the bearish forwards, meaning the selling setups, and the ultimate stop loss. Hands-on workbook when it comes to market structure, zones, trend line, Fibonacci, right? Drawing everything with detail, right? I have those available for you. For those of you guys that don't have the type of time to be in a chart or pay somebody, you have the books, all right, with all the details that you need. All right, so that'll be it. Peace out. I'm gonna see you guys next time.